So today I want to talk about interest rates do not affect the property market. And this is something that's super important because I hear this all the time that interest rates are going to rise, the property market's going to crash. That's when I'm going to get into the market. People have been saying this for years. You got people like Harry Dent and Steve Keen and all these other economists saying these things where interest rates has nothing to do with the property market prices dropping or increasing. Now, they do have some effect, but that's not the main effect on the property market. And I'm going to prove this. Now, I'm not saying that interest rates don't make an impact at all, but I'm saying that you can't make a informed decision purely on saying interest rates are going to increase, so the market is going to plummet or drop in value, and that's what I'm going to get in. There is no logic, there is no evidence, there's no logic thinking like that if you're listening to these people that are saying these things, when really, where's the evidence? And where things in the past have increased, the rates have increased, they've dropped, and property prices have gone up or down, opposite to what these people are saying. So today we're going to talk about, I've got a chart here. So in the last 30 years, the property markets that have, nationwide property market has dropped. Now, this is from CoreLogic. And as you can see, we've got our charts here on the side. Now, from the 90s, it was negative 4.4, 94, 95, it's supposed to be here. If you look on this chart, sorry for my error, negative 3%. Then 2004 was negative 2%. 2008, there was the GFC. So it affected Australia, negative 70%. 2010 to 12, 6% negative. 15 to 16, negative 1. And then, of course, 17, 19 was negative 8%. Now, if you can recall, in 2017 and 19, Melbourne and the Sydney market actually started to have a downward trend. There was actually, in the suburbs, that actually dropped 30%. And people don't know about this, or they forget about these times. But guess what? Interest rates didn't, go up or down. If anything, they're at record low, and I'll prove this and I'll show you this. And this is not to say I'm right or anything like that, but it's just to give you guys an understanding that not to make a decision just purely on one thing. Property is a big piece. It's a big puzzle, and there's a lot of pieces to it, and you have to put it all together to make sure that you are making a correct and informed decision. Now, you can never say there's no risk involved, because there's always going to be risk, but you can minimize the risk. Now, 2009 GFC happened, global financial crisis, rates went up and down and all sorts of things in a short period of time. And, I'll show you now what I mean by this. So from 2008, to 2009 or 2010, I should say, actually, rates, the cash rate was at 7%, as you can see on this right-hand chart, 2008 February, and it dropped, the interest rate dropped all the way to 3% by 2009 September, and then it increased up to, say, 3.75. Okay. Now, during that time, interest rates dropped, but the housing market dropped 7% nationwide. Those markets had dropped 30%, but interest rates were dropping. And in year 10 and 12, there was still another 6% drop in a nationwide market, which those markets still were affected. Okay, interest rates were low, at a record low at this point. This is a time when interest rates were at a record low, but the market did not boom. And so I'm explaining this and I'm showing you this because I want people to understand that interest rates are just one piece of the puzzle. Okay, you can see here, they've done a lot of action here. In 1 year, from 2008 to 2009 February, you went from a cash rate that was 7% or 7.25% to 3.5%, which is ridiculous. That's 4% dropping, or four basis points they call it. So that's in 1 year. Can that happen today? Possibly. And I guess the people that would suffer if something like this happened, if it went the other way around, where it increased, the people that have very negative geared properties, they will be suffering. They will be suffering because if they can't financially pay for these properties or hold these properties, it will have a burden on them. And then guess what? If interest rates do rise, people will have to sell property, possibly. Yeah, there will be some foreclosures, and I'll talk on that about another time. But let's have a look. 2017-19, 8% drop nationwide. Okay. At this point in time, we had the record low interest rates. You can see from 2017 to 2019, during this time, there was a Royal Commission, and we can see that interest rates were already at a record low, 1.5, the cash rate was at. And it dropped 8.4%. So who had an effect more on the market, the Royal Commission or the interest rates? Maybe it was the Royal Commission. Maybe there was something happening as well with politicians. Maybe there was something else happening in the economy, which there was. Now, this is just giving you an understanding that there is not just interest rates that you should be relying on. There is other things you should be, putting to the puzzle. Okay, and this is something I just wanted to show people, because if interest rates are always the catalyst for property prices, everyone will be following interest rates, and which they probably do. That's why there's the percentage of people that are successful when it comes to investing in properties, quite low. It's neither none. And that's why you shouldn't be focusing all your energy on interest rates. You should be focusing your energy on a whole bunch of fundamentals of, what's going on with politicians, infrastructure projects, new budget plans, and what's going on to a region, movement of people. I talk about this a lot because this is something to look out for. You're not supposed to just be looking at interest rates. You do want to make sure that interest rates, you can lock them in and you can view the cash rate. And the cash rate is something that you look at. So if you view the 1 year bond market, which I'm giving people a little thing, you can understand and see if the 1 year bond market, if that's increasing or decreasing, interest rates have something correlate with that 1 year bond market as well. So that's something to take into consideration. So will interest rates rise? Potentially. Everything has to go up. What goes down must come up. What goes up must come down. But I'm saying don't make a decision without any evidence and saying it's right or wrong, without checking and making sure you have evidence. If you've got evidence and you can see and you look at history, you look at when interest rates rise or decreased, and what happened to those markets and what happened to those locations, you'll see that the data does not lie. So that's all I wanted to, create this video for, so give people a better understanding, not just keep thinking that interest rates have something to do with property prices or are the catalysts when it comes to property prices increasing or decreasing. Okay, make an informed decision and make sure you do research, because that will make all the difference.